Welcome back. It was a weak set of earnings for UFlex in this quarter. The company reported a loss of 85 crores, but that's because of currency devaluation in Egypt. Their revenue was flat year on year, while the margin saw a contraction. Let's find out more. Rajesh Bhatia, the Group President, Finance and Accounts and CFO at UFlex, joins us now. Mr. Bhatia, good morning and thanks for joining in. This time, of course, there has been this currency devaluation in Egypt, and that has hit a lot of companies that have an exposure there. But tell us, do you think this could continue in Q4 as well, the losses that you've seen? And was it only because of a forex loss, or are you seeing your, operational performance overall weaken? What is the situation now on the ground?
I think even in this quarter, we've seen in January also, the Egyptian pound has devalued against the dollar. And with the dollar strength, a lot of countries where we are present, we're seeing that the dollar availability is an issue, thereby, the currencies are devaluing, whether it is, Egypt, or it is Nigeria. So I think, but more or less, it looks like, this quarter will be the peak of it. And then, it will be better. Even, on an operational side also, there is some impact, and, the life is getting back to the normal as we see that pre-COVID, this quarter was always the slowest one. So I think that those realizations are now sinking in. We had 2 very good years for in the COVID, but that is the normalcy is now catching up now, and sure. India business remains very robust, as you would have seen that even in this quarter we seeing volume growth, value growth, profitability is good. It's only that, this time we had an unprecedented, exchange fluctuation and devaluation loss of about 236 crore in aggregate, out of which 84 crore is from a formal Egyptian pound devaluation. And the rest of it also, we operate in various countries, we have various currencies exposure. So all that has hit us very badly in this in this quarter.
Mr. Bhatia,
yeah.
We understand that you have actually been hit very badly this entire quarter because of the devaluation, especially in Egypt. But like you mentioned, the oasis of calm for you all really has been the India business this quarter. You have done well in terms of volume as well as value growth. But do you expect those levels to sustain? And are you changing your focus to probably concentrate a little more on India?
No, I don't think so. There's any change in our plans currently. I think this dollar strength is now waning off, and we'll see as the US Fed tapers down its aggressive fiscal policies. I think the worst is behind us. All the jurisdictions we are in, I think once we have that sanity, I think we don't going to do good. India, again, we've done pretty well in all the parameters, whether it is the flexible packaging, even the packaging films and aseptic, as we've been saying that, that has been our superstar for the few quarters now. And just to let you know that January was a record production and the sales for us, creating another benchmark in our aseptic packaging as well as the flexible packaging division. So this business continues to do well. Overseas, we had certain issues because of the Ukraine war also, because the consumption in the European territory has been affected.
Right. Mr. Bhatia, we get that. So, just before we let you go, quickly, just some numbers for bookkeeping, if you could give us a sense. You had a 15,000 crore revenue target for this year with 16% margins. Do you hold on to that? What's your projection for next year? And on aseptic packaging itself, what's your volume guidance for this year and the next year?
I think let's talk about next year because that's relevant. So starting from January, I think we're looking now, and we've done that in January. We've done about 750 billion packs, which is equivalent to about 9 billion packs a year, as against our rated capacity of 7 billion packs, what we've announced. So I think that's a silver lining, and I guided earlier that that's one area where we're focusing very heavily, and debottlenecking our plant. So that has now shown, sort of tremendous improvement. So I think that's one business where we continue to be, very, very upbeat. On a margin guidance, I think if we take out the exchange fluctuation, I think our margins for the 9-month period is about 14.5%. Q4 holds the keys insofar as offshore business is concerned and how that pans out. We hit by about 1.5% because of the devaluation of the currency losses. And so if we put that behind, we are at 14.5 versus the guidance of between 16 to 18. I think it will be tough for this fiscal to maintain, come back to 16. Let's hope that, on an overall basis, we are able to achieve that. And next H2 onwards, we will definitely see improvement in European and US operations.
Okay, all the best. Thank you for joining in and giving us a quick comment on that. So domestic demand is good, but it is the challenging situation in Egypt which has hit their business quite a bit, the currency devaluation over there. That's UFlex down almost 5.5%. Let's slip into a quick break. When we come back, we'll get talking about the technicals of the market. Very, very quiet day, but Aditya Agarwala will be joining in.